You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is time to rock out in the world of futures options. Yes, it is time for TWIFO, the program where the name says it all. This Week in Futures Options. My name, of course, Mark Longo from the optionsinsider.com, except no substitutes, as well as, of course, from the network upon which all of you are just mainlining these days. Hope you're having a good trading week. Hope you're having a fun time riding that NVIDIA wave. Don't worry, we won't spend this whole show talking about NVIDIA, even though it does seem to be inescapable these days. We'll get around it talking about some other crazy markets out there. Of course, like what you hear this show, anything else, throw a like, a star, a comment, all of it on all the various platforms out there. All adds up to new people discovering the show, which is a good thing for everybody at the end of the day. And of course, if you want more show in your lives beyond just what hits the network, which is already a lot, I admit, but if you want to go above and beyond, the optionsinsider.com/pro is the place to go to learn more. You get options oddities tomorrow after volatility views, so your broadcast day doesn't end with vol views. You would have gotten our great pro Q&A session with our buddy, the director of risk, talking about all sorts of fun hedging going on out there and a variety of assets, not just equities out there. So we were talking about crypto yesterday. We were talking about rates and a whole bunch more over there. You can still get that if you go to theoptionsinsider.com/pro. Once you hit that join button, all 300 plus archived episodes are available for you on the exclusive Pro podcast feed, as well as giveaways, live streams, all sorts of fun. Theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us today. Let's see if the technology gods are smiling upon him, listeners, because there was a big technology outage, internet outage out here in the Chi-Town area. Seems like it was bedeviling him, but I do believe we have him now. He is our old buddy, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Mr. Uncle Mike, welcome back to TWIFO, sir. It has been a while.
It has been a while. Always good to be back. Can you hear me okay?
I can hear you. Sounds like we got you. So let's get the show rolling before we have any other delays. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we do just that. We break down everything, lighting it up to the light side and to the dark side over there at CME this past week. And speaking of the past, Mr. Uncle Mike, I just noticed my producers informed me you have not joined us on TWIFO since January 26th of last year, sir. So it's been over a year on TWIFO. How is that possible?
I do not know.
All right. Well, we got to make up for some lost time. And speaking of lost time, since the last time you've joined us, sir, we have upgraded the Movers and Shakers. So we start things off talking about the light side and the dark side from an underlying perspective, but now we have added in a little bit of vol movers and shakers as well, sir. Are you ready for that? Can you handle that upgrade, sir?
I am ready.
All right, then let's kick things off the way we are wont to do. Looking at the chart this week, listeners, from an underlying perspective, as you might imagine, things looking a little bit green this week. It's not an explosion of green, though. I would say it's roughly 60-40. I might even go 55-45 green over red. Slightly biased towards the green at the end of the day, but not an explosion out there. That said, Mr. Uncle Mike, where should we start our journey this week? To the light side or to the dark side?
Let's go to the light side this week.
You are a light side kind of guy. I expect nothing less from you, sir. To the light side we go. Number 5, kicking things off in the ags, in particular the livestock this week. Lean hogs up 2.24%. It was number 4 in the same direction last week, up nearly 6.5%. So you're talking about 8.75% just in the last couple of weeks. So a big couple of weeks out here for lean hogs. Number 4, we leap from the ags, go over to Uncle Mike's favorite complex, or maybe one of his favorites. He's got a couple of favorites. We're going to the metals, maybe the mini metals. We'll find out. It is palladium up 2.75%. Number 3 in the same direction last week, up 9.18%. So palladium certainly rocking and rolling and doing it again this week. Number 3, back to the livestock we go. All over the place already. Number 3, feeder cattle up 3.84%. Number 2, back to Uncle Mike's favorite, but we're getting base. We're going to the metals, this time to copper, up 4.11%. So no shiny stuff right now, all base all the time. And then number 1, you know what it is, listeners. If you've been listening to the show for a while, you know what's moving and shaking. Number 1 in either direction. This week is to the light side. It is nat gas, up almost 9.5%. Last week it was number 1 in the other direction, off 12.7%. So banger couple of weeks for nat gas. I got a feeling we might be visiting that one again. Again, I've said it many times. It is completely inescapable at this point from an overall options perspective. It is the story everyone keeps talking about, everyone keeps asking about. It's just, it's insane out there. But to the dark side we go now, listeners. Kicking things off in the equity space right now. A little bit of small caps, in particular Russell 2000. They had a rough week leading into today. They're making up some ground today, but they kind of took a bit of a drubbing. A lot of the equity markets did earlier this week. All of the just anticipation, the worry about could NVIDIA make it happen again. A lot of people were doubting that, so saw a lot of sell-off earlier in the week. Russell 2000 caught up in that, off 2.4%. Coming in at number 5 to the dark side. It was number 6 in the other direction last week. We extended our top 5 last week just for the Russell 2000. It was number 6, up 3.25% roughly, so giving a good chunk of that back. Getting a good chunk back today as well, so interesting. Number 4, we go back to the ags, this time to corn. Haven't talked corn in a while, off 2.5%. Maybe that'll make it on the show this week. I guess we'll find out. Number 3, to the energy we go. It is heating oil, off 2.75%. It was number 2 in the same direction last week, off about 4.25%. So a rough couple of weeks for heating oil. Number 2, back to the ags, this time to the beans, in particular soybean oil, off 3.48%. It was number 3 in the same direction last week, off 3.83% last week. So rough couple of weeks for soybean oil. And number 1 dark side mover, keeping it in the ags, it is oats, off 7.39%. You know the deal with oats, not exactly an option stalwart, so not exactly going to light up our tape on the show this week. I wish we could. I wish we could sink our teeth into oats, literally and figuratively. But alas, not an option, pun intended, on the show this week. All right, Mr. Uncle Mike, now you get to choose next where we continue our journey on the vol frontier. Should we go to the light side or to the dark side there, sir?
Well, let's do the dark side for vol.
Oh, look at you, mixing things up. All right, listeners, we're going out to CVOL land. You folks can look at CVOL for yourselves if you head on cmegroup.com. Just type in CME and CVOL. I'm not sure if you can get the ordered list. I don't think you can. I think that is a function of the premium offering over there from our friends at Bantix, BANTIX.com. So make sure if you enjoy this data, check them out over there at Bantix.com. Tell Nick we sent you. He'll be very excited. All right, to number 5 to the dark side this week, listeners, going out to the 1 year, a little bit longer term SOFR. Again, that's a 152.63. Again, these are the CVOL indexes that they calculate now. So that's off about 1.4 points on the week. We talked about the CVOL methodology a number of times here on the past. Derek Salmon has come on, talked about them from CME as well. If you're curious about the methodology, it is very much analogous to the VIX methodology. Takes the at-the-money vol, sprinkles in a dabble of skew, and you have a CVOL number out there. Now, these are not tradable, not yet anyway. Some people argue that they never will be. I don't know. I don't go that far. I think there's a lot of effort put into these. Got to be to some end at the end of the day. But right now, not tradable, but still very useful if you're tracking vol outside of just equity. Everyone can track equity vol. We're looking here at some other stuff. I think there's equity here too, but you're looking across the board here. Number 4 to the dark side this week, we have the aggregate energy CVOL. So remember, they take a whole complex and aggregate it together and get one CVOL number for the entire complex. In this case, the energy CVOL hanging out at about 50 3/4, off about 1.5 points on the week, listeners. Number 3, keeping it in energy, it is nat gas. Go figure. 69.80 roughly, off about almost 2 points. You can see there that level of CVOL, not quite the same as what we're seeing at the money vol-wise, but it's in that same ballpark, so gives you some frame of reference for what we're working with in terms of the CVOL number. Number 2, off to the rates again, 3-month SOFR, 96.40, off about a little over 2, about 2.05 points. And the number 1 dark side mover on the vol front this week, keeping it in the rates, it's the 2-year. The 2-year has been kind of active on the vol front of late, even though we don't talk about it much on the show. Not a lot of our listeners trade the 2-year or are interested in the 2-year, but nonetheless, number 1 dark side mover off 3.5 points this week, trading 161 and about 2/3 for their CVOL. All right, to the light side we go. Number 5, back to the ags. It is the beans. 1809 for the soybean CVOL, up about almost half a point, about 0.45. Number 4, going back to the metals, it is platinum. Again, P-named metals lighting up our movers and shakers this week, listeners. Platinum at about almost a 24, 23.94, up about half a point as well there, about 0.46. So just barely managing to squeak into the number 4 spot. Number 3, keeping it in the metals. A lot of metals on the vol movers and shakers this week, listeners. It's copper at about 18.5, up about almost half a point again, so 0.48. Not much separating the bottom half of our top 5 here. Number 2 is the 10-year, Uncle Mike's favorite, 133.10, up about 1.25 points. And the number 1 light side vol mover this week, keeping it in the metals. Again, another metal we don't talk about very often, aluminum, or as you Brits say, aluminium. 1994 is where that CVOL is trading, up 2.16 on the week. All right, Uncle Mike, we kind of have an embarrassment of riches this week on the movers and shakers, both from the vol front and from the underlying front. We could go to your favorite complex, the metals, a lot of metals lighting it up on the vol, and of course, on the underlying front, we got some vol lighting it up in terms of your favorite, the 10-year, even the 2-year. I don't think you're a big 3-month SOFR guy, but we could go there. We got equities with the dark side, Russell 2000. We got a lot of ags. We got corn and soybeans lighting up, or maybe something else. Nat gas, of course, on the energy front, our number 1 light side mover. Where should we begin our journey this week, sir? I'll leave it up to you.
Let's go to the dark side with the Russell.
Ooh, Russell 2000. All right, to the world of equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, let's kick this party off out there in the land of the equities. Go to that cmegroup.com/TWIFO. That's, of course, where you can get all the reports we talk about here, at least for the TWIFO reports on the show. Some of the other stuff, the movers and shakers, you got to play around a little bit with some of the other tools. But the TWIFO report we're starting off with here, you're going to go into that drop down. You're going to go down 4 slots to equity indexes, then product family, U.S. index E-mini, then in the actual product, going to go down another 3 slots to the E-mini Russell 2000. That is where we begin our journey this week. Uncle Mike, you and I have talked about a lot of different equities over the years. You're mostly an E-mini guy in the S&P. But I don't think you and I have talked a lot about small caps. So let's start there. how big of a small cap guy are you, pun intended, and what is your use case for them? And also, are you as intrigued as and I know a lot of our listeners are right now, by the fact that small caps just seem to be off doing their own thing every day?
Very intrigued by it. And that's one of the reasons that I think it's good that we're looking into this right now. From a use case, I mean, diversification. I mean, there's no other major asset class on planet Earth that's outperformed the S&P 500 over the last 100 years. So that's still the big dog. But there are times to where it's like the S&P is varsity and the Russell is junior varsity. But if those stocks start out on junior varsity, they're going to get up to varsity at some stage. And typically the process of moving from JV to varsity gives you more movement than it does once you're on varsity. So I like the small caps for diversification because if you get the hot up and coming stocks, they can be more rewarding at times.
Yeah, it has been a fascinating beast to watch small caps. Just Q4 of last year into Q1 of this year, it seems like they've just taken on a life of their own after getting, shellacked in the previous year, then kind of just coming alive. And also, from our perspective, Mike, we talked about Russell 2000 on this show for a long time. We had our buddies over there at FTSE Russell on the show with us for a long time, and we would struggle to find 10,000 contracts to talk about in a week. It wasn't the most active product. These days, you're getting a lot of weeks with 50-odd thousand contracts. Obviously, I should point out at the top of the show here, listen, this is a truncated holiday week, so some of the volume numbers talking about this week probably going to be a little bit lighter. That is reflected right now in the RUT options at about 25,000. Still, just a few years ago, that would be a banger week. So it's still looking pretty heavy. Have you noticed this as well, Mike? A lot more volume going up in the Russell 2000 products. Could be RUT, could be IWM, and also a lot more people clearly paying attention to this space than they were, let's say, even a year ago.
Oh, no doubt. I mean, there's a reason for it. And Andrew Giovinazzi likes to say options love a bull market. And the Russell has not participated in the bull market. Recently it's had kind of a life of its own, like we talked about. But the Russell could be the lagging market to where it could be the big pick to click in the near future. So I think there's a lot of interest there, and I think there is a lot of potential. It's a very interesting market.
Well, let's see what's interesting out there in the paper this week. It's an equity, so we expect a fair amount of near-dated paper. And we have some listeners. So 36.2% of the paper this week going out in the contract that expires in one day. So very much a 24-hour cycle we're going to focus on. But of course, Russell 2000 tends to buck the trend as well. And we have some interesting prints going up in March as well. We'll get there in a second because it's almost tied for number one. It's right behind it. But the number one most active contract this week in the Russell 2000 listeners are the 1960 calls going out tomorrow, going up 1,100 times this week. By the way, that front future coming in to start the show was at a 2015, so just north of the magical, mythical 2000 level. Russell 2000 since Monday is off about 1.2%. Of course, you go back to the end of our show last week, it's off about almost 2.5%. Again, getting some of that back today. But it's interesting, 1960s, these went up 1,100 times this week, opening 550 times yesterday. And guess what? 550 going up today. I'm guessing they're getting the heck out of Dodge today. I don't think they want to ride these into expiration, but we've seen crazier things. So looks like somebody may be scooping a little bit of the 1960s yesterday. That trade looks like it worked out pretty well, taking them off again today. I'll have to dig in to see what prices they got them on and off for, but I'm going to go out on a limb and say that probably was a pretty decent scoop. So people playing fast and furious with some near-dated paper here in the Russell 2000. And again, that is what we've come to see. A lot of people like it's not quite 0 day, obviously, because they did it on Wednesday, so it's got a couple of days to go. But still, a very near-dated trade out there. Scooping small caps, heading into the big NVIDIA earnings, and now getting the heck out of Dodge now that NVIDIA has lifted all boats out there in this massive exploding tide that it has created. But again, it's not all front month and not even all front day all the time when we're talking small caps. We're going to March now. It has about 35 days to go. That future at about a 2042, so a little bit more robust out there. By the way, what is vol in the small caps right now, you might be asking? I can give you 1 day vol. That's at about a 26.5, but we all know that's a nonsense number. Let's go out to March, 22.5, off about a quarter of a point. So still looking pretty rich. We were talking about it yesterday on Options Bootcamp. Now, the folks at CBOE, they like to track that RVX versus VIX spread. So that's, of course, VIX of the Russell 2000 versus the VIX itself. And that spread is at roughly the 90th percentile right now. At least it was about a week ago. So the distance between the RVX and the VIX is looking pretty high right now. It's a bit of a chasm. So if you're looking at small caps from a vol perspective, saying maybe should I dip my toes out there? Well, vol-wise, it's looking pretty frothy, looking pretty attractive if you like to get yourself a little bit of juicy vol. In terms of juicy action this week, it was the 1900 puts in March coming in at number 2, 1,063. So almost taking the top spot, not quite number 1. And pretty much all of that going up yesterday, 1,042 of these going up on Wednesday, 17 more trading today, but all opening out there on Wednesday. 1,900 puts, you might want to say people are selling these, but the skew is not looking that favorable for that. The puts last week, 4.3% bid. This week, 5.9% bid. So the puts getting a little bit juicier, I should say. Maybe arguing that paper bought those. But yeah, the calls, 1.2% cheap last week. This week, about 3% cheap. Of course, if you get into the near-dated contracts that have 1 day to go, those calls are actually bid. They're 1.3% bid. The contract expiring in 4 days, 2.2% bid of the calls. So a phenomenon we've been talking about quite a bit in small caps of late, the fact that the calls are actually getting a bid, which is something you very rarely see in a broad equity index, listeners. They're usually discounted all the time. So that could be another argument. Maybe somebody loading up on these 1900 puts. Certainly skew-wise, you maybe make an argument for that's the better way to go. So maybe somebody fading small caps through the next month or so. Mr. Uncle Mike, given the way skews are hanging out there right now, and the fact that puts are no longer super juicy, would you be more inclined to be, you think, a buyer or a seller of 1 month 1900 puts in small caps right now?
I'd be a buyer and then an owner of the underlying, I think, if I had to choose, because of the fact that, that's tough to say right now for the Russell. I mean, I think I'm bullish, Mark. I'm going to be a buyer, and then I'm going to own the underlying. Let's be bullish, and let's take advantage of that bullish sentiment that way.
Yeah, cheap protection. You can't go wrong with that, right? And in the worst case, you stop yourself out at a nice, sweet 1900, which is not that far from where we were not too long ago out there in small caps, Mr. Uncle Mike. So fascinating stuff. All right, we could spend a lot of the show in small caps, but where else should we head this movable options feast, Mr. Uncle Mike? What other products are lighting up your tape, sir?
Let's go to natural gas. That's always exciting.
Ooh, you're right. Some might say explosive. All right. To the world of energy, we go, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the world of energy we go. I feel like a broken record. It's pretty much week after week. I tell you to go into that drop down, go down 3 slots to energy, then in product family, 3 more to nat gas. And that's where we're hanging our hat out there this week. Nat gas, like we said, getting a bit of a pop. Some stuff going on the refinery front out there, giving us a little bit of a lift after it seemed like no bottom could be found in nat gas. We were threatening $1.50 last week. I think right around $1.54 on the show this time a week ago. So yeah, fascinating stuff out there. Catching a bid this week, 174 now in that front future, up about 13 cents. And if you go back to the end of our show last week, it's up about 9.5%. So catching a bit of a bid out there. And you know what? Even in this truncated holiday week, still doing over 2x what we used to do in a full week in nat gas. Used to be good for 400, maybe 450,000. 930,000 contracts up already this week, listeners, in a truncated holiday week. So nat gas just hitting another level, another gear from a volume perspective. Uncle Mike, you and I have not really discussed nat gas too often on this show, so I'm very curious where you fall on the nat gas spectrum. It does seem kind of like small caps, just the overwhelming amount of volume and movement out there is starting to attract more people to the nat gas space. Do you count yourself among them? Are you a new devotee of the nat gas space? Are your clients interested in this? And what is catching your eye out there, sir?
I like energy stocks in general. Natural gas, it's a bit more on the volatile side for my taste, so to speak. It's a very big part of what's needed in society, what's needed in a balanced portfolio. But just if you look at the drop that it took from the point to where it was like in mid in summer of last year, summer of 22, the drop with which it took, and then the pop that it's had so far this year. It's all over the map, and it's an exciting trading product. And if you ever want to sell some premium, I can tell you, I have 20 years in the business, I can't ever think of a time to where I've said, oh, wow, natural gas isn't doing anything right now. There's no juice in there. If you want some premium, that's a good spot to go. And like I said, I don't know. It's like the futures version of something that goes all over. It's like the futures version of Tesla, I would say, natural gas. It's kind of all over the place.
Yeah, who'd have thought we would say that and we'd see so much volume in a sub $2 product, right? How often do we joke on our other shows? You know, once options on an underlying gets below $10 and certainly below $5, a lot of people will wash their hands of it. They want nothing to do with it. They think the underlying is the option at this point. Here we have nat gas languishing $2 and below for a while now and putting up more volume than ever, Mr. Uncle Mike. So yeah, it's a fascinating product to watch. Even if you have nat gas fatigue, listeners, I apologize, but it is inescapable out here yet again this week. And also fascinating to see what's lighting it up. I said we're at about a 174 right now, so popping a bit from our lows last week. Nearly 1 million contracts on the tape. Of that, about 27% going up in the March contract. Has a whopping 4 days to go. So if you want some near-dated paper this week, if you want one-day contracts, we got some of those. And we also have a 4-day contract as well. So you got some near-dated flow if you want to play in the not quite 0 day, but pretty darn close game out here in NatGas. You can play this week. Maybe that's one of the reasons why we're seeing so much volume out there this week. What is the vol in the 4-day to go NatGas contract? Well, it's a wild, untamed beast. So it's at about a 98 right now, up 27 points. Again, 4 days to go. Vol in that short of a time frame, kind of a meaningless number. If you go out a little bit farther, the next most active cycle is actually the May contract. It has about 23.6%. The vol out there, a little bit calmer, 60.6. By the way, I mentioned the NatGas CVOLs at about almost a 70. 69 3/4. That lines up pretty well with actually the April contract. It's got about 32 days to go. That's at about a 68. So you could see how the CVOL roughly lines up with what we're seeing out there from an at-the-money vol perspective. But we're going to go out 4 days to go because that's where 27% of the paper is going up, listeners. Skew-wise, the puts last week kind of flat. This week, 7% bid, so puts catching the bid now. The calls last week, everybody wanted them, 7.7% bid. Now they've swung fully the other direction, 6.4% discount. So you're talking over a 14-point swing on the vol front in the upside calls. So that's kind of fascinating. Again, we did see a bit of a resurgence out there to the upside, so that's certainly going to account for that. And what was the big dog out here this week in this pretty action-packed, truncated holiday week? Was the 2 calls. Again, this 2-strike just driving the imagination of people out there, doing nearly 50,000 contracts, 47,000 contracts this week. The big day was yesterday, 26, almost 27,000 yesterday, 2,000 on Tuesday, and then about 18,000 today. So opening all week long. I'm going to have to guess, with only 4 days to go, they're probably taking some off the board today. Again, they're probably buying earlier this week. I don't know if it was a good trade, but we'll see. And then it's 4 days to go. They could have been overriding these as well. It takes a brave person to override upside in NatGas these days, but we were joking about that on our Pro Q&A yesterday. It takes a brave person to override NVIDIA calls as well, but doing it in NatGas is also interesting. OI, 27,250 right now, so anyone's guess what they're up to. I'm going to guess they're probably closing. Are you going to be opening 2 calls with 4 days to go out here in NatGas? I mean, wilder things have happened. That's a heck of a move. You need 26 cents in 4 days. If anything could do it, NatGas or perhaps NVIDIA could do it, but still, that's a bit of a wild one. Not to be outdone, right behind it, we have the 1/2 puts also expiring in 4 days, doing 44,000 contracts. The big day for those was Tuesday, 20,500, mostly closing there. So once we had the turnaround, it seemed like some folks were bailing on those 1/2 puts. 14,800 on Wednesday, slightly opening there. 9,000 today. That's against open interest of about 25,000 coming into today. So probably taking some off there as well. But again, we don't know for sure until we have to take a chance to dive deep into these numbers. And then beyond that, listeners, we go a little bit farther out in NatGas. Like I said, the May contract accounted for about almost 24% of the paper this week. The May contract, the vol out there about a 60. The skew last week, the puts 8.3% bid. This week, 12.1% bid. The calls last week, 3.4% cheap. This time, 4.5% cheap. So calls cheap, puts bid. That future's at about a 198. So that future is at about a 2. So you expect to see some 2 calls trading out there. But actually, no, it was the 1 1/4 puts. With about 60 odd days to go. Lighten up the tape out here, listeners. Doing about 37,000 contracts this week. The big day, Wednesday, 15,800, mostly opening there, followed by 15,300 today, 5,600 on Tuesday. Looks like opening all week long. The OI coming into today, 41,000. Are they going to be bailing on the 1 1/4 puts today after putting them on earlier this week with 60 days to go? Probably not. So that's probably additive paper going on out there today. 1 1/4 strike in 60 days, listeners, when that future's at about a 2. I mean, we could certainly see that. So you're starting to, now you're threatening May, not usually a seasonally robust period for nat gas. So 1 1/4 puts by 60 odd days. I don't know. I mean, I could certainly maybe see those coming into the game. Looking here if there's any roll action. The 1 puts also active, doing about 35,000. Are we going to break the 1 handle, listeners? I don't know. It looks like the paper does kind of line up. We had 15,000 and change of the 1 puts going up on Wednesday versus 15,000 and change of the 1/4 puts. And today, 15,300 of the 1/4 puts versus about 15,300 of the 1 puts. So maybe we just have some vertical action as well. It's opening on both all week long. A total of about 30,000 open on the 1 puts right now. So 1/4, 60 odd day put spread in nat gas. You like that any better, listeners? I don't know. Uncle Mike, what do you like better? The straight up 1/4 puts in nat gas with 60 days to go heading into the summer driving season, or the super sexy 1/4 1 put spread, which seems to have been trading this week as well?
I'm going to go with the 1/4 1 put spreads, because if you do that, you have some type of a defined risk in place. And I think I like that. If I was trading futures, I think I would do that right now, actually.
Uh-oh. There you go. Uncle Mike, we're talking him into a trade, listeners, as he's snacking on something that sounds pretty delicious. If you could break away from your snack food, sir, where should we take this movable feast next?
Well, let's go with the 2-year, because I think you had said that we got some interesting stuff in the 2-year. So let's go on the dark side of the 2-year.
All right. I guess to the world of rates we go, listeners.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, to the world of rates we go. Go into that drop down, go down 1, 2, 3, 4, 5, 6 slots to interest rates, and the top of it is U.S. rates. Then this normally where we would drop into, let's say, the 10-year, maybe sometimes even out to the 30-year. Nope. Uncle Mike taking us to the front portion of the curve this week, going to the 2-year. Again, a truncated volume week, but still you could see why we don't typically talk about the 2-year on the show. I mean, it does paper about almost 60,000 contracts, but compare that to the roughly 2 million where we normally hang out in the 10-year, and a very different volume beast. But to the 2-year we go, listeners. Also, our number 1 dark side CVOL mover this week, off about 3.5 points on the week. So got some vol action out here. Uncle Mike, I know you normally are a 10-year guy, but how much attention do you pay to this front portion of the curve? And what is your typical use case, if you have one, for the 2-year, sir?
Well, what's interesting right now is that we are in an inverted yield curve. So, for example, we have actually the 2-year. The rates on that right now are at 4.64. 10-year is at 4.32. Now, that's not really where the huge inversion is. Where the inverted yield curve comes in is into the 1 to 3 months. That's at 5.5%. And so when you have something like that, it's definitely a unique environment. The 10-year is my favorite to be in most of the time, just because it's kind of the Goldilocks. It's not too short term in that you, if all of a sudden we have a rally in bonds and you'll miss it, and on top of that, usually you'll get a better interest rate at the 10-year, but it's also not too long term, because if you look at The 30-year, that thing's gonna be all over the place. So I like the 10-year typically because of the fact that it's kind of just in the middle of everything. However, right now it's a little bit different in this stage in that what I'm doing is a lot of my holdings are based upon 1 to 3 month treasuries or more shorter term. And then with that, what I've been able to do is buy some premium on longer term yield or on longer term options. So let's say that all of a sudden the Fed starts lowering interest rates and the bond prices go up, or just we have a whole rash of buyers in the bond world for whatever reason and bond prices go up. You're not going to get that much benefit from the 1 to 3 month treasuries. Just not going to happen because it's just going to go away in 1 to 3 months. You're just not going to get that much price movement. However, you would in the 10-year, the 20-year, whatever, because that's where more of the juice is, and that's where the price dips would be on top of that. So the conundrum is that if God were to tell me, now keep in mind, God doesn't tell me future bond yields or interest rates or anything like that, but if he did, if he were to tell me that yields are going to stay the exact same from now until the end of time, then I'd be foolish to not put all my money for my bond money into 1 to 3 month treasuries. That's where the highest yield is. But God doesn't tell me what yields are going to do. So let's take a look at this for a second. If bond values go lower, 1 to 3 month treasuries or shorter term treasuries aren't going to get hurt that badly. You just wait 1 month, 3 months, or even what we're going to talk about, 2 years. Big deal. If yields and bond prices stay the same, you're still better off in shorter term. So the question is, what if bond prices go higher across the board? And if they do, you're not going to make as much money in the shorter term for reasons I just described, because you're not going to have as long of a time frame, but you have more risk in the longer term. So what do? Well, with this inverted yield curve, what I'm doing is I'm buying underlying in shorter term paper, but with some of the extra yield that I'm getting, because I'm beating the 10-year and the 20-year by almost a full percentage point, with some of that extra yield, I'm using it to buy some calls to where if we do get a huge and I'm not just buying calls, I'm doing call spreads and diagonals, and I'm doing all sorts of fun stuff. But if we do get this bond rally, I'll be able to, and my clients will be able to participate through the call. And by doing it that way, it's kind of a way with which to have my cake and eat it too. But for the time being, for holding underlyings, I like holding more short-term paper. And by doing that, you can use some of the extra yield money that you get. And it doesn't work out perfect. I'm just trying to be conceptual with this to actually buy calls on some longer-term paper. And that is reason number 436 that options are pretty darn cool.
They are pretty darn cool. Let's see what's cool out here in the world of the 2-year. Again, not the territory we explore too often on the show here, which is always kind of fun. Listeners, we're at about a 101.27 in that front future, off about a third of a point, or about 0.1 on the week from an underlying movement perspective. So it's not so much the underlying letting us up. It's more on the vol front out there. Like we said, about almost 60,000 contracts on the tape. 37% of that going up in the 1 day to go contract. So people playing fast and loose with their expirations on the rates front as well. It's not just for equities, the 0 day phenomenon. Again, this is not quite 0 day. It wasn't listed and expiring today. I get it. Save your email. But it's very much on the near dated portion of the curve, which is where everyone is playing these days. What is the vol out here? And again, rates not exactly bastions of high volatility. It's at a 2.5 on this front future. Again, up 0.6 this week, which is a huge move for rates. You go out a little bit farther though. Let's go out, I don't know, all the way about a month. That vol's at about a 2.5. So again, 2-year, not where you're going for the sexy vol trade. But then again, as Uncle Mike's pointing out, the curve is looking a little bit frothy right now. So maybe there is some intriguing fun to be had out here. Well, let's look at the curve right now in terms of, we won't even bother with 1 day to go skew. Let's go out a little bit farther out. Let's go out again about 30 days, listeners. Those puts last week, 2.6% cheap this week, 3.9% cheap. By the way, that future's at about a 102.1, 30 days out there, so a little bit higher. And the calls last week, 3.7% bid. This week, 5.1% bid. Doesn't sound like a lot, and it's not really when you're starting at a 2.5-point baseline. I don't think you'll ever see a 2.5 VIX. We've joked about that in the past. You just can't get that low structurally from an equity vol perspective. But in the rates, you can. And in terms of leading the dance out here this week, listeners, it was the 101 3/4 puts going out tomorrow that were leading the dance, going up 3,738 times today and 2,400 times on Tuesday. Not much going up on Wednesday. By the way, if I ever said Monday this week, it was one of those truncated holiday weeks. So just substitute Tuesday in your brain. So we're used to doing a full week here on the show. It always happens on these truncated holiday weeks. I always end up saying Monday somewhere doing the show. Just transpose Tuesday in there for me, if you will. And then, right behind it, we have actually going out a little bit of a ways. We're going out to the 103 calls expiring again in about 30 days, 29 days to be precise out there in April. 103 calls going up 4,143 times this week, 2,460 on Wednesday, about 1,500 today, and about 200 on Tuesday. Again, opening all week. Today's paper is going up against an OI of about 6,800, so probably opening again today, but again, we don't know that for sure until we have a chance to really dig into some of the block tools out there a little bit later. It's hard to do that during the show, listeners, so that's usually something we do after the show. So some interesting paper, very near dated, then a little bit longer term paper out here. Mr. Uncle Mike, we have time for probably one more product on the show, sir. Where should we hang our hat next?
You know what? Let me think. What would be a good challenge for Mark today?
Yes, that's what I need. I need more challenges in my life. Let's go with something completely exotic. I would love to do lumber. It does like 3 contracts a week, so it's kind of hard to. Same thing with oats. Can't really talk about oats. We could, with this metal's lighting it up, so we could do copper, palladium.
Let's do silver then. We'll do silver. I was with me on board without silver.
Yeah, it feels wrong if we don't do silver. So, listeners, to the land of metals, we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the world of metals we go. Go to that asset class. Go almost all the way down to the bottom to metals. Then we're going to go to precious metals. Even though a lot of the things lighting it up today were base, we had copper lighting it up. And on our vol, we also had aluminum lighting it up out there. But we are not going to go base. We're going to go precious. Get into Uncle Mike's wheelhouse of silver. Again, a light holiday week, only 23,000 contracts on the tape for silver. But Uncle Mike, I know this is a core holding for you. If you're not talking 10-year or if you're not talking equities, chances are you're sinking your teeth into some silver. What's been catching your eye? What have you been up to out there in the land of silver of late, sir?
So what's fun about silver is that last year, my risk reversal, it didn't make money, but it dodged a bullet on silver going down roughly 5% on the year. And so we lost a few pennies, but for the most part, we were unscathed by it. So now what I was able to do this year was put on a modified risk reversal to where the call option was at a lower price and the gap between where the risk was and where the call started is much less and much lower. Now, unfortunately, silver has not shot to the moon like I had hoped that it would and have been hoping for the last 10 years, but it has. It's in a better spot should it do it now. And so with silver, what I think is important to understand is that it's like a once-in-a-generation move with it. It'll bore you to death, and then you get the move every once in a generation. I remember when the show first started, all we talked about was silver and Apple all the time. And for at least that's all I talked about, because that was all I did, it seemed. But now silver, it'll bore you to death. But at some stage, we're going to wake up one morning to silver at 40 again. And that's kind of what I'm hoping for. But if it doesn't, well, we're protected and it hasn't really gone down. So that part is good.
It seems like we hear about silver every few months. People are coming in. Oh, now is the time for the big squeeze, the big upside move in silver. and we get a little bit of something, then it kind of peters out. So you're right. It kind of comes in fits and starts out there in the land of silver. Let's see if it's coming or going this week, listeners. Silver giving up a little bit of the ghost this week, right around 22 3/4 in that front future with 1 day to go, off about 70 cents or about 3% on the week, and about a little over a third, about 37% of the volume this week, such as there is, going up actually in the near dated stuff, in the contract, the March contract that expires in 4 days. So once again, people playing fast and loose with all things silver. I said we're at on that future at about 22 3/4, and it was the 23 half calls leading the dance out here. Let's see. By the way, what is the vol? You might be asking in silver right now. In the 4 day to go contracts at about a 17.5. If we go out a little bit, if we go out to, let's say, I don't know, all the way out, man, there's a lot of expirations in silver. They really are carving up. You can have one almost every day, it seems like, out. You can go out 1 day, 4 days, 5 days, 6 days, 7 days, 8 days, 11 days, 12 days, 13 days, 14 days. Oh, this is quite, you guys want your choice of expiration cycle. Silver is bringing it for you. Let's go all the way down to the bottom of the list here, almost to 31 days. That's where we have the vol at about a 2060, off about 1 3/4 points. So looks like pretty much across the term structure outside of these very near dated contracts, we see silver vol hanging out at about 1970 or so, 20 3/4, off about 1 to 1.5, almost 2 points. So silver vol seems like mostly coming in this week, even if the lion's share of the paper is going up in this 4 day to go contract. And out there, let's see, the calls were 7% bid last week, 6% bid this week. So calls kind of staying flat. Usually expect in these precious metals, listeners, a bit of an upside call skew, and that's pretty much what we're seeing out there. And in terms of action, it was the 23 half calls. So I said we're at about 22 3/4. So in 4 days to go, if they're buying these, they need silver to make a bit of a move. They traded almost 1,000 on Tuesday, 912, about 350 today, 220 on Wednesday. Again, opening all week long. OI coming into today's paper was about 2,500 contracts. So 23 half, I don't know, Uncle Mike, you like those 23 half calls in 4 days in silver when we're hanging out at about 22 3/4 in that future, sir? You think that's a pretty big move for silver in 4 days?
I mean, it could happen, but I mean, with silver, I like going more longer term with that, just because you got to be patient, and the thief in the night is going to come at some point. I don't know if it's going to be in 4 days, though.
Let's look for a little bit more Uncle Mike time to paper. Let's go out a whopping 30 days, which again is an eternity. I don't know, Uncle Mike, you like this massive array of expirations they've got for you here in silver? You can pretty much pick your day now here in silver, and you probably have an option expiring that day. Does that entice you? I know you're a big SLV guy, which makes sense for a lot of our audience. It's the preferred product, but does this, some might say, ridiculous array of expirations in silver, does that entice you, sir?
I mean, I love it. I think it's a great thing. I wish there was more of that on the stock side of things.
Yeah, we keep saying, where should 0 day hit next? Apparently, it pretty much already arrived in silver without anybody knowing. So, yeah, you have quite the array of options, pun intended, out here, listeners. Let's go out a little bit farther out, maybe a little bit more into Uncle Mike's wheelhouse. Again, a month isn't that far, but for all these expirations, it certainly seems like it is. The 26 calls in April, listeners, going up about 1,035 times, almost all of that on Monday, 1,005 on Monday, mostly opening there. The vol in April is at about a 2060, like we said, off about 1 3/4 points. Skew-wise, puts last week 3.7% bid, or I should say 3.7% offered. This week, about 3% offered, so mostly hanging out similar levels. The calls last week, 6.2% bid. This week, 6.4% bid. So skew not really evolving a ton, but we are seeing a little over 1,000 of the 26 calls. You like those, listeners? 26 calls with about a month to go. That future at about exactly a 23. So we need a 3-handle move in about a month. Can we see that happen in silver? Crazier things have happened, but again, maybe it's that time again. As Uncle Mike says, it comes like a thief in the night. Maybe in the next 30 days, it is the time. Either way, some folks slinging about 1,000 of the 26 calls this week in silver. All right, Mr. Uncle Mike, that music means we've come to the end of our very wild journey this week in TWIFO. Man, we hit all over the place. We hit metals, we hit the 2-year, which is not something that makes it onto the show every week. We hit nat gas, which is, of course, a frequent offender out there, even a little bit of small caps. I guess the only thing we were missing was maybe a taste of the ags, like some corn or something like that. But outside of that, a pretty wild journey this week. Did you have fun, Mr. Uncle Mike?
When's it ever not fun to be on this week in futures options?
We'll have to do it more frequently than once every 14 months or so, sir. It's been a while.
It has.
All right, before we go, Mr. Uncle Mike, if folks want to come at you and discuss, let's say, I don't know, silver or 2-year versus 10-year or small caps versus large caps or anything else, where should they go? What should they do?
And check out my website, stcharleswealth.com. We're longer-term investors, and we are wealth managers. First, investment managers second, but we do believe in the option product, and assuming it makes sense for the client and it's compliant, of course. But check it out. Would love to have a conversation with any listener from the Options Insider Radio Network.
There you go. Check them out. stcharleswealth.com. Give them a follow on Twitter at Mike Tosaw, Tosaw, all one word there as well. And of course, you know where to go to get all these reports and a whole bunch more. CMEGroup.com/TWIFO is the place to go to get the TWIFO reports. If you want to dip your toes into the CVOL, just type CME and CVOL into your browser of choice, and you should be able to find it there. You might be able to see it in the TWIFO reports. They do include volatility indices. I'm not sure if they do it on the CME free version, but if they do, you can play around with the CVOL there as well. That's going to do it for us on the network today. Back again tomorrow, noon Central. Going to dive into all this vol, and man, we saw some this week, so should be a fun show. Who's joining us on TWIFO tomorrow? You got to tune in to find out. And then after that, coming back exclusively for our pro cats and kittens with a little bit of options, oddities, myself and the Rock Lobster will hold court on what trades we had and what trades we watched out there in the unusual activity side. If you want to check that out, as well as the other 300 plus episodes waiting there for you on that pro podcast feed, the optionsinsider.com/pro is the place to go. Then we're back again on Monday, kicking things off with Uncle Mike again on the option block on Monday, followed by, right after that, the crypto rundown for all you crypto kitties out there. On Tuesday, pro Q&A. Wednesday, a little bit of options boot camp. Then we're back again next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.